They call it Dr. Copper. They call it Dr. Copper because Dr. Copper, the commodity, usually is a pretty good indicator where the economy's going. Wasn't so much last year, and this year's doing well, but maybe not so much again. Tatyana Shumsky is here with us because you have this story. You got this story nailed down in the paper, online.
It's
some
out.
nice graphics.
It's out.
I thought it was a good graphic.
It was an excellent picture.
Let's talk about copper.
Well, we look at copper as an indicator of economic health, and not of just U.S. economic health, but of the world. Right. And we trust copper because it's used in everything. It's in your iPhone, it's in your laptop, it's in your car, it's in your house. It's the reason why the lights go on and off.
Right. It's in China.
It's in China.
Right. And I mean, this is what was going on here, right? You've had copper up a lot this year, expectations of Chinese demand.
Exactly.
But your story says maybe that demand isn't there.
Well, people look at two things. We look at industrial and manufacturing activity in China, and we look at Chinese imports of copper, right? And Chinese imports of copper have been really strong for the last few months, and it's been a bit of a surprise because it's not necessarily seasonally the best time to be for the metal to be going in. But whilst the metal is getting into the country, it's getting stuck in storage. So it's not being put to use. It's not being made into any of those useful things that we want it to be made into. It's not turning into, wires or plumbing bits or whatever. It's just sitting there. Right. And that just means that, the Chinese economy is not doing that well, and perhaps prices shouldn't be as high as they are.
Right. Talking about China again, too,
Once
right?
again,
We're starting the show talking about China.
You get back to that soft landing, hard landing concept in China, and is the field starting to, I mean, the talk has always been soft landing, soft landing. Is the perception now maybe turning to at least mix and possibly the other way? I
mean, you talk to manufacturers in China and, they're not feeling particularly positive right now. I mean, one of the people we spoke to for this story was like, his company usually has orders even through the 2-week Chinese New Year celebrations. This year, they're not, and they're operating at only 50% of capacity. That's a scary thing for them.
That is very scary.
And now, quickly, because Tatyana, you also cover gold. I want to switch gears for a second. Quickly, tell us what happened in the gold market yesterday and what that means.
I mean, really, Bernanke was testifying to Congress, and he said nothing, and that spooked the hell out of the market.
Nothing new. Let's say nothing new,
well,
right?
It's not that he said nothing new. It's that he was completely mum about QE3. Right. Right? And if you look at least even Wall Street Journal data, the expectations of QE3 have been declining, but they're
gold,
still there.
Forget that. Gold sold off sharply.
Gold sold off sharply. It went down, I think, about 5% yesterday because we want easy money for gold. Because if there's, if QE3 is on the table, you want to have a hard asset that's not going to devalue at the same rate as the dollar.
Well, the dollar will go weaker if we get a QE3, right?
Exactly.
I mean, obviously, so you buy gold. So yes, so do you think that was just a one-day thing in the gold market? Is that
the gold rush, if you will, was spooked a bit by the Treasury market first, right?
Yeah,
It was a big sell-off in 10s and 30-year Treasuries, or actually it was across the board, and that spooked the gold market, and it actually spooked the euro as well yesterday. It came off.
Right, and you can see gold now, so it's up 0.4%, so it's stabilized a little bit. So you think that was just a one-day thing? It was a big move, though, for a one-day thing.
It was a very big move for gold. Gold is not the asset that jumps around by 5–6% a day. So it was a big move for gold. It really kind of rattled a lot of people. But the other thing you have to remember is, at the start of yesterday, before Bernanke, gold was within sight of 1,800, and that's a very fragile part for the market because we like 1,800, but we're a little scared of it. We flirt with it all the time.
All right, let's keep. We're probably going to flirt with it again pretty soon, right? Tatyana, thank you very much.